G'day everyone, welcome back to Pete's Investing. Today's April 1st, 2023. This is the spot gold price update. We always look at these three time frames. So they've got the daily, the 4 hourly and the hourly. And you can see there on the daily and the 4 hourly, the CCI 1500 is in an uptrend with its moving average in an uptrend. That's a moving average 400. And on the hourly, it's actually sort of fluctuating up and down on that moving average, so it's uncertain where it's going to go, and that's evidenced by this wedge forming, and I'll go to that in a minute in more detail. Let's drill down to each of these time frames. So you can see here on the daily chart, we do trade predominantly with the moving average and not the moving average on the CCI, but not the moving average on the price chart. So our primary indicator is the CCI 1500 moving average. So only take long trades when that moving average is in an uptrend, and also when the CCI is in an uptrend as well. You can see here on the Fibonacci retracement between that low and that high in that range. It did bounce off initially off that 38% on those two bars, but now it's sort of leveling off and sort of fluctuating in that 23% retracement on the daily. On the 4 hourly, I've drawn these two ascending and descending trend lines, is forming this wedge. But outside of that, you can see there's a key resistance area up there and a key support area down here. And in that distance between those lows and those highs, you can see there initially bounced off that 38% retracement, as I said, and now it's fluctuating in that 23%. So again, the CCI is in an uptrend, so that's a bullish sign, although you can see there it's sort of leveling off and going flat, and I'll show you that in a minute on the hourly. So we want to see a break to the upside of one of these descending trend lines more confidently, whether it's an upside or a downside, to be more confident about where we're heading. So let's discuss that in the on the hourly chart. Again, you can see that wedge forming there, and I've drawn a little extension here. So if it does break to the upside, I've drawn a Fibonacci extension, and you can see there it's almost touched the 123% extension level initially, but then it's fallen off, and now it's coming back down to more realistic levels. So again, note the CCI has broken its moving average and sort of fluctuating up and down, so it may go either way. And what we're looking for really is, let's look at Fibonacci retracement between that low and that high. As I said, we always want to make sure we don't fall much further than a 61% retracement level, and that's, I've drawn this dotted line there at the 61% retracement level. So if it breaks outside of this wedge, and then it falls below this dotted line, that's 61%, which is at the 1933 level. If it drops below that, we're going to see possibly a more bearish outlook coming down towards this support area. So we really want to, if you want to go bullish, we want to see a break above this descending trend line, and then ultimately break above that resistance area to be more bullish going forward. So at the moment, if you're not in the trade, I'd hold off until we get more confident movement outside of this wedge. But if you really want to go long, I'd really wait to break this resistance area to be more confident about taking longs. So that's where we are on that. To understand how to properly trade using the average down approach, reference the links in the description below. Subscribe and like the channel, and see you in the next video.